if you just look at this chart right here, you can see that every single time in the last however many recessions we've had, once it hits over 0.5, we're already in a recession. And so that has the market a little bit spooked today.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, James Lavish, co-managing partner of Bitcoin Opportunity Fund and author of the Information's newsletter, warns of a looming crisis for global risk assets. He explains the recent market sell-off, its causes, and what to expect next.
Yeah, I mean, let's be clear. Bitcoin has been for a long time, it's been the tip of the risk spear, right? So it has benefited from risk asset inflation. And so as risk assets, as more money have come into risk assets, it's gone into Bitcoin as well. And Bitcoin being a super volatile asset, it's done well on the volatility to the upside. But remember, Bitcoin has had a tremendous run over the last year, this year in particular, because of the injection of capital coming through ETFs. And that's been a great development for Bitcoin. And I believe that it's going to spur more institutional investors to do their homework, learn about the asset, see why it's different, and have a true understanding of it, and then added to their portfolios in a separate allocation. And that's really the progression that we're looking for here. We're not there yet. It's taking institutions a long time to get comfortable with this asset. However, if you look at this chart, you can see that along the way throughout the last, over the last, I'd say 9-11 months, you can see the orange line shows you where that Bitcoin drawdown has been from the all-time high, whereas where the NASDAQ is, and they're right on top of each other. So Bitcoin did have a drawdown over this last number of weeks, but that has to do a lot with what's been going on in this election. You had a nice run up, tried to get through the all-time highs again. It looked like Trump was going to be like just sweep. It looked like he was going to win a landslide a month ago. And right when he almost got assassinated, you could see Bitcoin jump back up. But then as this whole thing is played out, Bitcoin has kind of drifted a little bit, but look at where it's come to. So it's right on top of where the NASDAQ is on a drawdown from the all-time high. So this is really interesting. As you look at this chart, you can see that Bitcoin had a very nice run from the creation of those ETFs. It got to that all-time high, but since then it's been consolidating, and this has been healthy to me. It's been super healthy.
MicroStrategy is seeking to sell its class of shares to raise as much as $2 billion to buy more Bitcoin and for general corporate purposes. In a regulatory filing with the U.S. Securities and Exchange Commission, the Virginia-based company did not disclose a timeline for the share sales or reveal how much of the proceeds would be used to buy Bitcoin. In June, after announcing an offering of $500 million in unsecured senior convertible notes to purchase more Bitcoin, MicroStrategy increased it one day later to $700 million. MicroStrategy, co-founded and led by Michael Saylor, is already the world's biggest public holder of Bitcoin and is not seeking to give up its position. It currently holds 226,500 Bitcoin, worth more than $14 billion, depending on market fluctuations. The company has said it considers itself the world's first Bitcoin development company, committed to the continued growth of the Bitcoin network through its activities in the financial markets, advocacy, and technology innovation. Last week, MicroStrategy reported a second quarter net loss from its software business of $102.6 million or $5.74 a share, Bloomberg reported, noting that the company uses income from its software business to support Bitcoin purchases. It was the company's second consecutive quarterly loss, Bloomberg said, adding that analysts were keeping an eye on its cash flow situation.
If you remember, Michelle, the last time we saw Bitcoin actually act as a risk-off asset was when people's money was being threatened. And that was back in the Silicon Valley bank disaster. So
Right.
during that disaster, and when that looked like it was going bankrupt, and it ultimately did, Bitcoin rallied, and Bitcoin did well during that time. And that's because people they woke up and said, oh my gosh, my money is not safe in the bank. Well, of course, the Fed came in and said, yeah, it's safe. Don't worry. We're going to come up with these acronyms for these bailout programs, and your money's going to be safe here. So don't panic about that. So Bitcoin kind of went back to where it is, and people haven't had to learn about it yet. What we're looking for is some sort of disruption in the market that is like that forces Bitcoin to be the risk-off asset. It's not there yet, but I believe as we get more institutions understanding and allocating to it in their portfolios, it will get to a size that it will be a store of value, a true store of value with lower volatility. It's just natural, as it's only a $1 trillion asset right now. If you look at the overall assets in the entire world, the investable assets in the world, you're up at about $900 trillion worth of investable assets. Bitcoin's just a fraction of that. It's like 0.15%. If you get 1% of those investable assets, Bitcoin's going to be trading over $400,000. And so that's the point, is that once it's there and you have $9 trillion, $10 trillion in that asset, it becomes a place where investors can feel comfortable and they can be confident that it's a long-term store of value. And that, Michelle, is when we start seeing allocations out of other asset classes, not just it being allocated as an asset class itself, but allocations out of things like long-term treasuries, for instance, where you're seeing that you're getting negative real rates for long-term bonds. And investors will eventually wake up and say, why am I putting my money in a 20, 30-year treasury that, if you look at inflation, and inflation will be high over the course of the next couple of decades, or at least the next decade, because of the deficits we're running, because of the amount of debt that we have, there's no choice. We have to run negative real rates. That's just reality. We have to debase the currency in order to keep up with it. So you need nominal GDP to go higher because of inflation, which means that inflation is causing your bonds to not be worth as much on their yield, which means that you're getting a negative real yield. And once investors clue into this, and those yields are not high enough on those bonds for them to store their value, they will turn to Bitcoin eventually. And when that happens, well, then it becomes a 2, 3, 4, 5% allocation or even more.
Just last Monday, Bitcoin surged to $70,000, a level it hadn't seen since early June, following a favorable speech by Donald Trump at the 2024 BTC conference in Nashville. However, this price surge was short-lived. Bitcoin failed to maintain this upward momentum, plummeting to $62,200 by Friday in reaction to the U.S. July jobs report, which revealed unemployment rates had a 3-year high. As Wall Street faced its own setbacks, Bitcoin continued its downward trend into the weekend, reaching a new 3-week low of just under $60,000. Market analysis suggests further possible declines. According to expert predictions, if the current bearish trend holds, Bitcoin could retreat to the mid to low $50,000 range. Drawing parallels to previous bull markets, these predictions suggest that Bitcoin could drop further, potentially reaching between $40,000 and $50,000. These insights are grounded in historical patterns of significant pullbacks following substantial gains. Several elements have been identified as drivers behind Bitcoin's recent price drop. Among these are substantial outflows from Bitcoin-focused investment vehicles like US-based ETF, with Friday alone seeing an exodus of over $230 million. Further compounding the issue is the lack of bullish momentum, as Bitcoin has struggled to stay above key support levels. Market analysts have also pointed to a pervasive sense of investor anxiety, fueled by upcoming economic indicators that may influence Federal Reserve policy decisions. Investor sentiment has undeniably taken a hit, with many nervous about the potential direction of future economic policies. The current situation underscores the volatility inherent in the cryptocurrency market, where factors such as regulatory news, market liquidity, and macroeconomic conditions can drive significant price swings. Analysts are closely monitoring these developments, particularly how new economic data might shape Federal Reserve actions in the coming months. The recent downturn in Bitcoin's price highlights the interconnected nature of global financial markets and the impact of economic data on investor behavior. While Bitcoin's resilience is often lauded, the current market conditions remind investors of the volatility and risks inherent in cryptocurrency trading. Moving forward, market participants will need to carefully navigate these turbulent waters, keeping an eye on economic indicators and policy decisions that could further influence the digital asset landscape. Staying informed and vigilant will be key for anyone involved in this dynamic and rapidly evolving market. And do not forget to subscribe to Bitcoin Selloff. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.